Pete McGuire from XM. Pete, a very good Monday morning to you. Thanks so much for joining us. Let's start locally then. The Reserve Bank. Yeah. A bit of a split opinion here about what we're likely to expect tomorrow. What are you looking for?
Well, good morning, Andrew. I don't know whether they'll swim against the tide, and happy Monday. You know, after we saw what happened as far as the ECB and the Fed last week, and even, the Bank of Japan, I think the tide will be too strong for them. And I'm looking at 25 basis points. And later in the week, I wouldn't be surprised for the POMs. It's a 30% probability of 50 basis points. I think they'll err that side. So, that's where I'm looking. I might be, I might be proved wrong, but that's where I think most traders are looking at.
How's this likely to affect the Aussie dollar, Pete, do you think? Because certainly came under a lot of pressure end of last week. We also had that move by the Bank of Japan. What are you seeing there?
Yeah, you're around, mid 66, Andrew. I think it's probably baked in, and I think it'll hold in that channel. We haven't seen any huge breakouts. It's still around that. That's an ominous number, isn't it? But it's still around that sort of number, that mid 66 range, and maybe it's going to push up to 67 if you see that rate rise come in. If you don't, probably it'll be, possibly even under 66. So it's a hotly contested currency, and our traders certainly love it globally against all the different cross rates.
All right. What's the data the Reserve Bank going to be looking at, do you think? What they've seen, obviously, given the decision is tomorrow.
Well, you've got your jobless rate, 3.5%. You've got CPI cooling 6% year on year for Q2. So they'll look at the big data points. They'll see on board what's happening domestically with PMIs. And then, of course, they'll look at the bigger picture, where we are from trade perspective, the currency, and then naturally, what our trading partners are doing and, the central banks across the globe. So there's plenty to look at. I'm not sure whether I'd want the job, but if you're getting paid the right money, I suppose you'd take it.
Yeah. Oh, well, so you're not throwing your hat in the ring. That's disappointing, Pete.
Not at the moment, eh?
Yeah. Go sit on the board, make those decisions. Okay, Pete, of course, the other central bank I mentioned there that will deliver its policy decision to Bank of England. What are you watching out for?
Well, the POMs, Andrew, they've, as far as inflation, they've crushed 8%. They're now at 7.9. So that's a good sign. The second part of it is everyone's saying it's 25 is baked in and 30% probability of 50 basis points. I'm erring on that side. I won't be surprised to see them jack it up 50. So it's going to be a wild one, I think, for the POMs this week as far as currency trading. Could be an interesting cross, euro against the pound and possibly yen against the pound, but certainly US dollar against the pound. So, it's going to be an electric week. Last week was dynamic, big moves across, equities, currencies, commodities, and I don't think this week's going to disappoint either, Andrew.
All right. And Pete, also a number of PMIs, taking a look at where manufacturing and services are tracking at the moment, particularly out of the States. What are you looking for?
Yeah, I just want to say I want to keep a close eye on those sort of numbers, Andrew, because it's a lead up. That'll give us a good indication as far as mood and sentiment. And then later in the week, of course, Friday is non-farm payrolls. And I just want to see how those all roll. You've got your PMIs, you've got those indicators that give us a data set that traders look for, because this is a 24-hour, 5-day-a-week business. And you can't take your eye off the ball because of that big fundamental news. I mean, a lot of traders only trade seasonality or technicals, but I truly think that you've got to embed those big data points. And fundamental analysis is crucial for decision-making processes to understand what's about to drop and the impact it can have.
Pete, you've always got to focus on commodities, I know. What are you seeing with oil prices at the moment? In fact, notching fifth straight week of gains last week. In fact, up about 5% for the week. We're seeing more optimism, I guess, in the market in regards to demand, but also we've got those supply cuts at the same time.
Well, exactly right, Andrew, and they're really starting to take on board, and it'll be interesting what the Saudis do across August and September. But you've got increasing demand. And that is a worrying thought. I'm just looking at the numbers. I mean, it's been incredible to trade, been dynamic for a number of weeks. Big push to the upside. You got $85 for Brent, 90s on the doorstep, and I won't be surprised. Possibly you take it out over this coming month. So, that's let's say by the midpoint of September. So I think that genuine push to the upside, it just seems to be really embedded at the moment. And WTI is hotly contested as well. Hurricane seasons traditionally start in August. And for the new traders out there, keep an eye on seasonality and the weather and the impacts it can have to rig disruption. So I think energy is going to keep on going.
What about gold, Pete? It's trying to push back towards 2000 level. We did see it move again higher on Friday, given those bond yields and the US dollar came off. What are you seeing there?
And Japan, of course. So that's the other side. It seems to be holding steady around that 1980 to say 2020 sort of range. It's channel trading. There's no big breakouts at the moment, but it can happen at any time. So if fear enters the market or market sentiment changes quickly, then I won't be surprised to see it go up. And I still believe that its best days for the year are ahead of it over the next 5-month window. And many analysts are saying 2200 is achievable from the big banks, and that's Goldman's and all that sort of stuff.
All right, Pete, and what are you expecting equity-wise this week? Locally, the market here tend to be lagging, certainly those outsized gains we've seen on Wall Street. What should we be watching?
Well, I think you've just got to keep that, if that momentum stays, Andrew. I mean, last week was booming. How Friday night ended. NASDAQ up nearly 2% at 1.9. S&P up 1%. I mean, they're strong numbers. So I think the overall consensus is if that can continue across Asia today, we'll get swept up in it. Aussie's looking, fairly strong. So, don't get in the road of a bull market. It seems to be very, very aggressive at the moment and to the upside. And, I'm not here to put a dampener on it, Andrew. Just try and make $1 out of it.